Hi, good morning. Hope you're well. Okay, so 11th of March is the end of the bank term funding program, which was established in the US back in March 2023 to save the US regional banks. If you remember, already back in 2022, there was a whole hoo-ha regarding the cryptocurrency companies FTX, which is Sam Bankman-Fried's company, and Gemini and a load of other platforms went bust. Following on from that, you had banks or crypto banks like Silvergate that went bust, and then you had big ones like Silicon Valley, which did deal with the crypto sector. That went bust, and then Signature Bank went bust, and First Republic went bust. And the US Treasury came out with a 60 billion loan fund that would allow the banks, the regional banks, to borrow that money for 12 months in order to save themselves. The regional banks have been getting into trouble since well before Corona, but Corona frustrated and aggravated it further because they went and took all of the money that they had received from their investors and from their depositors, and they went and bought US Treasury notes. Where did that money come from? That money came from the Trump payouts, Donald Trump, and government payouts during COVID. All governments made payouts. So once all this money was deposited with the banks had to park the money somewhere. So they had to put it somewhere in order to secure the money. The best place was UST notes or US Treasury notes. That's as good as cash. They get a little bit of interest, and it's a safe haven. However, that's when US bond prices were high back in 2020. And as inflation and interest rates came into play, bond prices dropped. Yields, which is the interest element of those bonds, went up in value, and therefore the banks were losing money because they invested high, and now those bonds were worth a lot less. So that bank term funding program was introduced to save the US regional banks to the tune of $60 billion. The only problem is that quietly, without anyone noticing, that $60 billion escalated very quickly to around about $135 billion minimum. Could be that was already back in January, so it could be anywhere 140, 145 billion. No one really knows. And that has come to an end today. Now, it doesn't mean they necessarily have to repay that loan today. That was the original idea, but the Fed and the US Treasury will no doubt let them off and won't have to repay that loan yet. But they will need another funding program, because as we saw last week with the New York Community Bank, Bancorp, they effectively told clients and depositors that they've got no money. Their shares sank 42%. Their net deposits withdrawals were 7%, and in addition to that, they dropped the dividend from 5 cents down to 1 cent. I have said this over and over again. I've gone on about it, but it is a major potential crisis. Now, what's likely to happen is that the US Fed and the US Treasury will come up with another scheme, another program, in order to save the US regional banks. But the US regional banks are in trouble. It's not a matter of fear-mongering or not a matter of exaggerating or stressing everyone out. I'm just saying it objectively as it is. The US regional banks are in trouble. How that is handled going forward is another question completely. You could get, for example, another strategy from like Steve Mnuchin, which was the former US Treasury, was given the nod by Jerome Powell to go and invest $1 billion in the New York Community Bank, which is unusual considering they've got the most horrendous loan book and they've got late payments on their clients and net withdrawals of their deposits. So it's not a great investment, but somehow he's given the nod to invest $1 billion of hedge fund money, which is about 15% of what they're holding, into New York Community Bank. It's a bit strange. New York Community Bank is one of the top 20, is one of the top 20 US regional banks. So overall, you've got a banking crisis. However, it is not being highlighted in financial markets. What the financial markets are totally focused on is AI, artificial intelligence, being pulled up and directed by NVIDIA. NVIDIA is a great company. So anyone thinks that I'm criticizing NVIDIA, it's not true. It's a great company. AI has a major spot to play globally, and it is a huge advance in technology. So I don't want people misleading what I'm saying. I'm not anti-AI, I'm actually pro-AI, but I want to be objective and direct with where that's going. So going back to the regional banking crisis, what's likely to happen is near term is there'll be some sort of bailout by the Fed in terms of an extension of another 100 or 200 billion loan system or loan facility set up. And on top of that, you're probably going to have a lot of mergers and acquisitions. But is that going to save all the banks? Is that enough to save all the banks? In my opinion, it's not. What's likely to happen is it's probably going to be a money printing exercise to go and pump up these banks with hundreds of billions, and eventually that will feed through to inflation. Now, what the Fed wants to do realistically is lower interest rates in 2024 for a few reasons. For a few reasons. Number one, they have to refinance around about $10 trillion of US debt, and that $10 trillion at the moment has a pay rate of 2%, and present interest rates are between 4 and 5%. So for them to make it economically viable, they're going to reduce interest rates, so when they do issue the debt, they won't have to pay out 4 or 5%, they can pay out, say, 3%. But at the moment, based on the 2% obligation that the US government has in paying the debt, they can't afford that either. So that's going to cause a problem as well going forward. The other reason why they want to reduce interest rates is in order to help the regional banks. That will reduce the yields and therefore push the value of the bonds higher, and that would make the net asset value of the US regional banks stronger. I know it's a bit complicated, but if you want to develop this conversation further, you can comment US regional banks, and I'll be more than happy to help you out on understanding this particular